Hey everybody, Zak Nordyke with you here, passionate learner when it comes to business, entrepreneurship, and investing. I'm excited to share kind of a first look at a post that I'm creating that's still in the works. There's certainly rough elements to it, but it's to illustrate Bitcoin's correlation with the S&P 500, and it's also to kind of illustrate Bitcoin's connection to all other cryptocurrencies. When Bitcoin's up, most other cryptocurrencies are up. So it's a driving force of the crypto market, that is Bitcoin. And the S&P is one of the driving forces of Bitcoin, as well as obviously then the crypto market in general. I think that some of the thought is that crypto and specifically Bitcoin are uncorrelated to the S&P 500. While I think that that's fundamentally probably true, the way the market views it, and if you're looking at market price action and cycles, they're heavily aligned. So where the assets might not be truly correlated and over time things could change, currently the S&P 500, and more specifically, and I don't have the charts to kind of back this, but specifically the tech sector, which comprises obviously an enormous part of the S&P, are the key drivers of Bitcoin's price, just when it comes to market price, as well as the other cryptocurrencies. So with all that being said, that's kind of how you have to view things through the macro lens. And again, there's other macro events that drive it too. But if S&P is performing well, more than likely crypto's performing well. If Bitcoin's then performing well, more than likely all the other cryptocurrencies are performing well. And why do we have to take that approach? We don't. If you're making more kind of product-centered investments, all that I'm going to tell you doesn't count. If you are investing, though, in specific tokens and coins, you've got to pay attention to this. So let's take a look at this. And again, this is for entertainment purposes. This is not investment advice, but I do want to show you using some information. And again, you can point out that the charts aren't, they don't have the current year, but I think you're going to see trends that are historically holding true when we look at this. So I'm going to dive into a screen share. Forgive the kind of rough draft nature of the post, but hopefully the information and the overall message that I'd like to share, finds some kernel of truth for you. So in the beginning charts on the post, and again, I'm going to have to credit, I guess, this Alpha Sigma fund did a great job of illustrating when the S&P, the spider price is high, so Bitcoin's typically rising. When it dips, Bitcoin dips. So Bitcoin right now, whether it's kind of fundamentally correlated or it's just market psychology that's relating the two, you can't kind of fight it. The S&P goes up, Bitcoin's probably going up. It drops, Bitcoin drops. So when you have movement in the equity market up or down, specifically the S&P, you're going to probably see Bitcoin rise. And then, again, I know this is 2019 and just a very small snippet of it. When Bitcoin prices rise, other cryptocurrency, whatever you want to call them, altcoins, etc., rise as well. Will that always be the case? Who knows? No one knows. But right now, the S&P is kind of the macro driver. And there can be other events, obviously the Federal Reserve increasing interest rates, a potential war, global warfare. Other things are going to play a factor in it. But one of the biggest drivers is if the S&P is up, Bitcoin's typically up. If the S&P is down, Bitcoin's typically down. If Bitcoin's up or down, typically the other altcoins or other cryptocurrencies are up and down. Are there exceptions to this? I'm sure somebody could point out a limited case, but when we're looking all in all, these are some of the indicators you have to be ultra aware of. And again, it seems like common sense, but when I hear, gold is not correlated to S&P, or Bitcoin's not correlated to S&P. It seems like they're pretty highly correlated, and there's obviously some exceptions, but don't think of it as an uncorrelated asset group. Could it be long-term? Sure. Is it right now? Doesn't appear to be, based on, information that's available. So let's dive another layer deeper, assuming that's understood, that S&P is like one of the key indicators for the crypto markets, success or lack thereof, and Bitcoin's really the kind of key dominant force that drives all other cryptocurrencies. Let's just kind of use that as the starting point for the conversation. And then what this write-up is really more focused on after that is how you can use the Sharpe ratio in the fear-greed index to not always perfectly pinpoint, a market bottom or market top. But if we just take a look at Bitcoin and you look at certain patterns in the fear-greed index and the Sharpe ratio, you're going to be able to identify pretty well when things are cooling down and you're seeing a lack of market sentiment, when you're seeing weak market sentiment, sell-offs, people just thinking Bitcoin's going to go to zero. You'll see that reflected in particular Sharpe numbers and particular fear-greed index numbers. You have to really have your eyebrows raised when you're starting to see these patterns. And it's not just a one-day thing, but when you're looking at, multi-day patterns, 10 or more days at certain ranges, it has to kind of hit you right over the head and wake you up to the fact we're probably getting into a low point of the market cycle. Conversely, when there's extreme greed, when there's Sharpe ratios going up rapidly, there's particular number points, but when you're seeing a quick increase in Sharpe ratio, as well as greed to extreme greed on the fear-greed index, you got to say to yourself, boy, at some point, people are going to start to take profits here, or they're going to start cashing out their chips. It's getting hot. Are these perfect predictors? No, but it's just like the writing starting to kind of get put onto the wall that we're either approaching a low point, and it's typically an annual low point, or you're approaching more than likely a sell-off. So let's now think through the numbers. And again, you can get on my case for not having the 2021 data or the small amount of 2022 data, but please understand the pattern. Please do your own research, and please know that this isn't investment advice. But if you can see the patterns that I'm going to hopefully point out to you, I think you'll see that they're still holding true today. Okay, so one of the things that I use in the write-up as just a sense of when you should start really diving into these numbers. When Bitcoin Sharpe ratio is at a negative 0.2 or below, right? That should wake you up. And that typically connects with a fear-greed index that's in the extreme fear range. And I believe that's the number 25 or below. But boy, when you see it in the teens, like 19 or below, you should really start to think. A lot of people are selling off. They don't want to touch Bitcoin. And when I'm using the word Bitcoin, the crypto space is cooling off, because remember, we're using Bitcoin, the sentiment and the market, the market belief in Bitcoin as something that's tied to all of crypto. So again, when I'm using the word Bitcoin, I mean crypto is really cooling off. But when you're getting a negative 0.2 Sharpe and you're getting a 19 or below fear-greed index, which is the extreme fear range of that index, you're probably approaching an annual low. Is it perfect? No, but the price point is probably getting in that neighborhood. You're seeing people fearful. You're seeing people panic selling. That is a great time if your chips are on the sideline for you to start allocating in. What do I mean allocating in? when I'm saying to allocate into direct crypto investment, a Bitcoin, an Ether, a Cardano, a whatever, you can name your direct crypto investment, right? That is a good indicator, but that's too, I think it's too, it doesn't give you enough. Like just that, reaching that level for a day or two doesn't really show you anything, that it's not showing a trend per se. It's maybe showing something that you want to dig into, but it's not showing a trend. So if we dive into what I'm identifying, and I'm using 10 loosely, it's typically a lot more than that, but when you got a sharp in the negative range, okay, and you've got a fear greed index in the 25 or below range for 10 or better days, you are seeing a clear pattern that people in the market, participants, however you want to label them, institutions, are fearful. They're dumping, they're getting rid of, they're selling off. There's terrible news. There's, China banning cryptocurrency, shutting down all miners. There's something horrific going on, and that has a reflection in both the Sharp as well as the fear greed index numbers. When you're seeing 10 or more days of that, day 1, day 2, day 3, when you're seeing this ongoing pattern that it's consistently negative Sharp, it's consistently in the teens or below for fear greed index, you're going to see pricing that's probably a really attractive entry point. Your allocation into direct crypto investment, again, it could be Solana, Avalanche, whatever your area of expertise is, whatever project you're versed with, it's probably a great time to allocate into those if you have patience, okay? And I have snapped out different cycles. In 2018, obviously this is way more than 10 days. You had either fear or extreme fear for, and I don't even know how many days this is, this huge cycle of days. Was this the lowest price point in 2018? It actually was not. I think that there was a time that it was down to 3,000 or 4,000, but you saw a really good buy point that if you would have held for 12 months, you would have made at minimum 2x on the investment. So was it the absolute most attractive buy point during that calendar year? It wasn't, but it was certainly a great lower entry point. So 2018, when you had this extended run of extreme fear and extreme and negative Sharp ratio, you had a great buy point. There was actually one more, I think, towards the November, December timeline, and I apologize for not knowing that off the top of my head, where you had another pattern of, a long chain of days of negative Sharps and extreme fear, or at least minimally fear, where you were down in the lowest range. Is it okay to be wrong and not pick the lowest of lows? Probably, because this, at minimum, over the course of the year, usually proves that it was a good buy point. But you just got to be patient. Maybe you don't kind of forcefully allocate during the first cycle of this type of behavior. Maybe you take whatever the allocation is that you want to put into direct crypto, and you chunk it into thirds. Maybe you dole out during the first kind of pattern run of this, this type of data. Maybe you only go in a third and you say, hey, there might be another cycle of this, and I'm going to go in again and increase my position if there's another downturn. Again, that's preference. But if you have a long time horizon, you're probably getting this at a good buy. And a long time horizon, in my opinion, is 5 years, but maybe a more reasonable time horizon for most would be a year. It's likely you're going to see a pretty nice return because you're buying it when people are most fearful. There's blood in the street, people are running away. You're picking it up and you're using at least small data points. I'm not saying that this is some type of revolution of science, but you're using some data points to justify your buy point. 2019, now you would have been super successful buying at these buy points. Okay, so we're seeing a period of January and February of 2019 where you had, again, a negative Sharp ratio well below negative 0.2, very, very negative Sharps, and you're seeing a fear greed index of fear. You're not seeing that 25 or below frequently. You're seeing some days of it. But when you're seeing that negative sharp coupled with fear or extreme fear, is it perfect to what I said, 10 consecutive days in the teens, 10 consecutive days of negative 0.2 on the sharp? No, it's not perfect to that rule. And you can adjust the rule, and it's not really a rule, but it's not perfect to that framework. But boy, if you're not paying attention, it's a long cycle of fear and extreme fear and really low sharp ratios. So again, sharps obviously a measure of risk, risk adjusted potential reward. So when you're seeing negative sharps in a long series of fear to extreme fear, that's got to, that's at least got to wake you up that this could be a good buy point. Again, if you have allocation that you're waiting to kind of put in when you're attempting to see where maybe a bottom of a market cycle or a low point of a market cycle is. Let's just look at 2020. This is a snapshot of roughly mid-March through, early April. You're seeing a much more aligned extreme fear, negative sharp. You're well below the negative 0.2 sharp. You have, obviously well more than 10 days of extreme fear and numbers in the teens or below. That's like a flashing green light that you're getting close to a bottom, and that it's probably a wise time to allocate in, again, predicated that you're looking for kind of the most bloody, whatever you want to refer to it as, people selling off, people's confidence, down the drain. If those are the points of time that you're looking for, the data would support using this, again, with some deviation to a small degree, that it's probably getting close to a good buy point. And, I marked out that if you would have bought at any of those buy points and you would have held for 12 months, you would have at minimum returned 2x on, whatever you would have allocated towards that buy. So we talked about the buy points when you're looking for extreme fear and extreme risk. And those are indicators, those are real snapshots of chains of days that the data was pretty much in the ballpark of good buys. Now, on the flip side, and this doesn't always happen, especially the sharp ratio of a 3, that has been more a 2020 and, through today type of number that you're going to get. Prior to 2020, that was not it. So I've kind of thought this more for the present market conditions, but you can go with a sharp of over 1.5 probably and a greed level of 65. And I think that this would still hold true, that the market's really heating up, and you could face a sell-off, and you could, if you got too greedy and you let the sharp increase too high and you let the greed index roll too much, you could be in a position, because Bitcoin and crypto tend to rapidly decline. It's not like, you kind of slowly climb back down the ladder. It's like the sell-offs are vicious. You could be up, $3,000 per token one day, and then all the profits are gone. So you've got to be really mindful of when people's greed levels are getting high and when the risk reward ratio looks really attractive. Like, wow, this is kind of a risk-free return in the range of 3 to 5 to, I think the sharp's gotten as high as maybe 10, which is insane. It's just looking like you can't lose. When you're looking like you can't lose is probably when you're most susceptible to losing. So that being said, the general premise in thought process, based on kind of what I've been looking at with the information from 18, 19, and 20, was when you're seeing, and this doesn't mean an intense, like sell the whole position off type of situation, but when you're seeing a chain of days, whatever you want to call it, when you're seeing consecutive days of a 65 and above, fear greed index, that's kind of when greed begins, and a sharp ratio at 3 or above, you're going to want to start to trim the position, meaning sell off. You're going to probably be capturing good profit if you bought in at one of the fear, extreme fear points with the low sharp ratio. you're starting to get into a pattern where people are feeling like they can't lose. And in 18, it wasn't like ultra clear. You're not seeing a 3 or above frequently, and it's certainly not 10 days of a 3 or above. But you saw the greed really starting to escalate. You saw well over a 2. A 2 is something where I think the risk adjusted reward is quite high. Like that's, I don't know, I think it might be in the excellent range. I forget, 2 is excellent and 3 is outstanding. I'm not sure where it is, but the sentiment should be quite high at above 2. So you're getting close to that 3 neighborhood for multiple days in a row. You're seeing clearly, a number of 65 and up days during this timeline. 18 wasn't crystal clear that that was a great time to start trimming the position and selling off, but that should have given you some thought, hey, I might want to take some profit here. Now, 19 and 20, you had much clearer indicators with just long patterns of extreme greed. Again, the Sharpe ratio was not at 3 during any time where extreme greed was taking place. What does that tell you? Well, I think that people were getting greedy, and actually the risk adjusted reward wasn't that good. So people were kind of getting greedy without thinking about the risk levels. The risk levels were pretty high, actually, and the greed and people piling into positions was high. Can that be a good indicator? Yeah, I think if you're thinking it through, it can be an excellent indicator that people are getting kind of absurdly greedy. And look at the price run up. I mean, you're looking at 2019 in mid-June or roughly mid-June, 9,000. The price goes to 12,000. Basically, you're getting over a $3,000 run up in less than a month. That already shows you something. You've got not a great Sharpe ratio. You've got extreme greed. You've got a price pump of $3,000 in less than a month. Boy, I don't know if it's even trimming position or a full exit of the position. That seems to be somewhat unfounded risk reward, confidence. So that was a great time to sell off, as exhibited by that data. And again, it doesn't hold true to the framework of the 3 or above plus the extreme greed or greed, but it holds true to just a long chain of extreme greed and not a great Sharpe ratio. So that also kind of is a tipping point. 2020, and I apologize for not having the 21 data here, or even the 21 plus the little bit of 2022 that's transpired. So the extreme greed, it wasn't just extreme greed, like it was extreme greed plus like a surging Sharpe ratio. Like I don't have the data from before this November point. It was quite high, probably late October. It started this surge. Not only was it a 3 Sharpe value during that point, but it skyrocketed from 3 to 5 just very quickly. The risk adjusted reward looked really attractive, but the extreme greed levels were just kind of staying consistent. When you're seeing these extreme greed levels in either a Sharpe that really starts to surge up pretty quick, you're also seeing a pattern that people's confidence might be getting really high. They're piling into their position. People are also coming in off the sideline. Whoa, I'm going to miss out before this goes to 100,000. And, I think that they're maybe not wrong to have the confidence. I mean, it's showing that the risk adjusted reward is very high, but it's also showing people's confidence is just kind of like, it's a self-fulfilling prophecy. They think it's amazing. The position's getting piled into by many people, and it can overheat it because you'll see the price jump so quickly with no kind of pause point. It just keeps surging each and every day. It's good that if you're 10 plus days into it, you're at minimum trimming, and if you see an extreme leap, that you're maybe selling off the entire position and waiting for people's confidence to become more rationalized. And then almost inevitably in crypto and Bitcoin, it won't just be a rational sell-off. Everybody will go from it's the greatest thing ever to the worst thing ever, and it will just be down again. You can buy as people's confidence rapidly plummets. So that is, and I apologize, that's another piece that goes with something else. But again, please don't take this as investment advice. Hopefully it was good food for thought. And I'll have this out where you can look at the numbers yourself. But just wanted to share that even before I got into like the whole write-up piece. I think it's interesting. Hopefully it informs maybe some of the decisions you'd like to make about investing in crypto and Bitcoin. Thanks so much.